Many telecom companies have recently turned around. AT&T's stock price is finally going up after 5 years, and Verizon's stock price is also returning back to normal levels. Vodafone, however, is still at extremely low levels. The dividend is wrong. The dividend was cut to 4.5 cents, so around a 5% dividend, but still an 8 PE ratio. So let's look into it. Is this a buy? For Vodafone, you can't really look into the revenue, because they sold off huge chunks of their business, so you can't look at past revenue. Overall in Q3, their service revenue grew 5.2%. Service is the main part of a business, which is the standard business of just providing telecommunication services. This excludes some sell-offs, because they sold off Vodafone Italy and Vodafone Spain. Vodafone Italy, they got 8 billion in cash. They massively decreased their net debt from 2022 62 billion to now 44 billion. Now they had to sell off some parts of the business for that, but those were the lower performing businesses. Overall, they have been constantly growing at around 4 to 6% lately, and that is with a little bit of a drawdown, because their biggest market is Germany. And in Germany, a new law passed. Before, your landlord, and you gotta know, Germany's a big nation of renters. When it comes to your TV connection, was allowed to just give you a TV connection, you had to take it and had to pay for it. So if Vodafone was your TV provider, it was just there. You couldn't change it. Now that was changed. Now you had to get your own TV connection. And some people didn't get it, so they only kept 50% of customers, so that massively dragged down their revenue. Now, they would have declined 2.6% anyway, but because of that drawdown, they declined by 6.4%. Germany is currently a very competitive market. The economy is also not doing well. So them growing group-wise at 5%, while Germany, 34% of the service revenue, is shrinking by 2.6% and in reality 6.4%. That is great. Once the German market turns around, when it comes to net additions, they're slowly getting into the positive. I think this revenue is going to accelerate even further. Now, when we look at the other markets, UK, 3.3% growth. Nothing stellar, but good. Out of Europe, 2.6. That is just the normal revenue growth for telecommunication companies. And that is even better than, for example, AT&T had. So that is 34% of their business growing at around 3%. Now they have some other markets, of course, some more frontier markets, like Turkey, where they're massively growing revenue. In euros, not in lira, because the Turkish lira is basically a dumpster fire. If you're gonna measure your revenue growth with that, you would be at like plus 1 million by now. The other markets like South Africa, Egypt, and the rest of internationals are also growing well. Now they have also Vodafone Business, which is just the business segment, that is performing around similar. It is not as big when it comes to the revenue, but overall still okay growth. They expect to make 2.4 billion in adjusted free cash flow, and this is important because if you look at maybe stock analysis or your general stock info platform, you would think, hey, operating cash flow 16 billion, 4 billion capital expenditures, 12 billion in free cash flow, 20 market cap, no brainer, buy. Different regulations when it comes to listing. Vodafone doesn't really give you that much info here on under the year how it is. If you would want to see how they calculate free cash flow, etc., you would have to go to the annual report, which would come out next quarter. This is the one from last year, just so you can see how they calculate free cash flow, because of what you would need to look out for in this company. Cash generated by operating activities. CapEx is higher here. Capital addition 6 billion. I will just highlight the important parts. License and spectrum. Interest received and paid. Taxation. And payments on lease liabilities, because they lease their towers. That is a pretty big payment. That is how you come to their free cash flow. Here they expect to make 2.4 billion that year. That is around an 8 multiple, so not that high, but also not that low. They have also heavily started buying back shares. For example, so far they've bought 1.5 billion year to date, mostly because of the Vodafone Italy sale. They had so much cash. Even if they lowered their debt, they still had so much left over that they put some into share buybacks. They still have 500 million left in their share buyback. That is still around 2% of the business. You're not gonna get those 2 billion each year though, because of the 2.4 billion that they expect to make, the dividend also has to go, even if it was cut to 4 cents a share. Plus, their debt is gonna increase after they merge with Free UK. That business has a higher debt load, but overall, they cut down a lot of less productive businesses, invested more money into the business, and they're now growing at 5%. Once Germany improves, I think this can even accelerate. They're paying out a nice dividend, buying back shares. So let's see, what would I pay for the company? If we take that 2.4 billion in adjusted free cash flow, that's 9 cents in free cash flow per share. Now, what are our assumptions gonna be? I don't think they're gonna sell off much more parts of the business. And if I do, that's cash coming in. I think they're gonna have a 5% growth from now. Even if some businesses decelerate, I think Germany's gonna slightly improve over time. At least it's not gonna be shrinking by 6% as it is right now, or 2% after the one-offs. Currently, we're paying around half of a cash flow out as a dividend. I put that here also with a deduction due to taxes. And we're probably gonna use the other half to buy back shares. That's around 1 billion that we're gonna use just to buy back shares. That is around 5% of a company right now when it's trading at 20 billion. So when we get the 5% underlying growth plus 5% share buybacks, they might even increase that. A slight deceleration after 5 years. 12 multiple, not a fantastic company, but also it shouldn't be trading that cheaply right now. They lowered the debt extremely and the market really hasn't given them the credit for that. That gives them $1.35 per share. Euros. Currently at 0.83, that's a 62% upside. That's why I'm buying. And what if it goes even better? Oh, whoopsie, I just noticed I used the wrong multiple down here, ignore that. What if just German business accelerates further, they put more money into share buybacks, and the company trades at a 15 multiple? Well then, $1.91 a share. And even if it goes worse, German business doesn't improve. They only buy back maybe 4% of the shares and grow 4%. And they stay at an 8 multiple. Even then, we make a 10% return here. So I'm buying Vodafone because I like the risk. It's not that high. You have a good underlying cash flow, and even if you can sell some of the better businesses off to generate even more cash, what do you think about it? Write down below. Have a good day.